Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Monday, November the 14th, 2011. Well, a continuation of the trend to the upside today. Previous day's trading we had a candle that made a higher high and a higher low, established the trend to the upside. Today we have in bar chart terms an inside bar, and that's a bar that didn't continue the higher high and higher low, but also failed to change the trend to the downside and didn't make a lower high and a lower low. So the previous trend remains in force, which was a trend to the upside in the first time frame. In terms of candlesticks, we have a red body candle, and that's in contrast to the previous two trading days where we had green body candles and a relatively large green body on the previous day's trading, but today a moderately large red body candle denoting the sellers making net bearish progress on the day between the open and the close. We've also had the sellers close down the market down towards the low, certainly below the midpoint level, so the sellers have actually taken control of this market for today. They did, however, lose some commitment when they tested at this support area to 1246, and we can see that small shadow on the bottom here. Now we can see this pattern that's formed in this market, very strong uptrend, and for all patterns we do need a prior trend, and here we have the prior trend. Here we have the congestion area, and we have lower peaks but higher troughs within this congestion area, which means that it's a symmetrical triangle. And we're waiting for the breakout. These tend to be continuation patterns, so if we see a breakout to the upside, the target that we'd have from this is the distance between the boundaries at the widest part of the pattern, which is roughly from about 1290 to 1210, so about 80 points. And if we break out down around this 1270 region, this market has potential to trade up to roughly around 1350. We do have very strong resistance above there, however, and initial resistance to get past if we do break out would be 1275, and then certainly this zone of resistance that takes us into the 1300 round number, very strong resistance there, but quite a few levels all the way up to around this 1344 region where this market could hold up. But the important area was this zone, and when this market began to contract, it interacted with that zone of resistance near 1300 and sold off, and we haven't been able to trade up into that area again. So we do need to be careful about taking a signal from a breakout to the upside. If we see a very bullish breakout, then we might feel more confident, but certainly we would like to see a solid bullish close up above the 1300 level. To the downside, if we do have a breakout to the downside, and these patterns can also be reversal patterns, we do have support from the Kijun-sen, which is trading at 1225, then down to 1219, and certainly at the top of the cloud, which is around that round number 1200, so very strong support down there. Support extends all the way down through to the bottom of the cloud at around 1142. Now in Ichimoku charts terms, we are trading up above the cloud, so the market is maintaining its overall positive bias. So even though we've been congesting up above the cloud, the market has failed to trade down substantially into the cloud. We tested there once for one trading day and failed to close back down in there for any other trading day. So very important that we haven't, the sellers haven't been strong enough to trade us back down into that area. With regard to the pattern that we've seen, the symmetrical triangle, the odds for us having a good payoff for a breakout to the downside would be quite slim, because we are trading up above the cloud, so we have an overall positive bias. So more likely that the breakout would be to the upside, but we're more likely to meet very solid support from the cloud in this 1200 region if we do break out to the downside. So certainly not a great trade that should be taken if we do see that breakout to the downside. In terms of the Kijun-sen, the pink line here, we are trading above the Kijun-sen, and we're just trading above the Tenkan-sen. So the market's bullish in the medium term and fast term timeframes, but pretty much neutral in that fast term as well, because we're trading very close to that Tenkan-sen. Now, we can see on the shadow the market did find support at the Tenkan-sen, which is around that 1248 region as well, very close to that important 1246 support area. So for this market, very important to watch for breakout. If we do see a strongly bullish breakout to the upside, good likelihood we will test up to around this 1300 level, but that's very strong resistance. A breakout up above there could see higher levels, but let's wait and see how this market develops over the next few trading days. Next to gold, and here we see a red-bodied candle, a continuation of the trend to the upside. The candle has made a higher high and a higher low, continuing that first time frame uptrend that was established for the previous day's trading. But a red-bodied candle. So with this candle, the sellers have made net bearish progress and they've closed down towards the lows. So they've taken control of this market for the trading day and shown some commitment. We see the shadow on the top of this candle, and that represents the buyers losing commitment as we tested around that 1800 level. That round number 1800 is a very important level. We tested there previously, and we've seen it hold as support previously. Now it's acting as resistance, and we're seeing price rejected from that area, so that's a very important level for this market. That resistance actually works in a zone, and it extends up to around the 1814 level, where we've seen the market test and failed to close above in the recent past. This market looks like it could be forming a congestion area. Not possible to say yet, but if we do see a change of trend to the downside here, we do have potential for a symmetrical triangle to form, as we saw in the equities markets with the S&P500. But that's all just conjecture at the moment. This trend could continue and just be a swing low down here, and we could take out the previous peak. So it all depends on how the market reacts to this loss of commitment by the buyers for today's trading. In Ichimoku charts terms, we are trading up above the cloud, so this market is maintaining an overall positive bias. We're trading above the Kijun Sen, so bullish in the medium-term time frame, trading above the Tenkan Sen, so bullish in the fast-term time frame, and the checkout span is above the corresponding price action, so confirming the bullishness that we're seeing overall in this market. In terms of the Kijun Sen, we are seeing that point sideways. So while that point sideways, there always is a possibility that the market will be attracted back towards there, and price action is attracted back towards the equilibrium represented by that Kijun Sen in the medium-term time frame. So that does enhance the probability of a change of trend to the downside, because of the failure of the buyers to support this market with the short-term dynamics, or the reading of the bulls and the bears throughout the trading day. The Tenkan Sen is pointing up quite sharply, and we can see how it's held as an area of support previously, so that will be very important for tomorrow's trading. It's trading at 1759, and we would like to see that region hold as an area of support. If that fails, then we could see the market trading down towards the support at the top of the cloud, which is roughly at about 1724. We have a previous swing low which will act as support, and then the support extends all the way down through to the bottom of the cloud around 1680, with the Kijun Sen around 1704, and another important level at 1683. To the upside, obviously 1800 is very important, then 1814, and we have a bit of downside price rejection above that, extending up to roughly about 1845, 1850. So an important day tomorrow. Let's look for a potential lower high and lower low for a test down to the Tenkan Sen, but watch the 1800 level for a potential continuation of the trend to the upside in the first time frame, and potentially in the second time frame if we take out the previous peak. Next to light sweet crude oil, and here we see quite a different market than we've seen with the equities market, and a market that's been trending up very strongly in the first time frame. Today's trading, once again, a continuation of the trend to the upside. However, we do have in bar chart terms an outside day, and that's a bar where we have a higher high but a lower low, and that's a bar of indecision. It's indecisive because the buyers were strong enough to take the market higher than the previous high, but the sellers were also strong enough to take the market lower than the previous low. So a large battle and a volatile battle going on in terms of trading throughout the day. It is, however, a red body candle, and here we see a quite a different change in momentum in this market than we've seen over the previous couple of weeks. Throughout the previous few weeks, we've always had green-bodied candles or some doji or spinning type candles, but never a red-bodied candle. So that does raise doubts about continuation of this trend to the upside. The red body denotes that the sellers have made net bearish progress, so the buyers have lost the upside momentum that they had for the previous 2 weeks, and that is little wonder because the market has tested the important resistance level at 100, a round number and a very big level, and this market has tested 100 on quite a few occasions and has sold off substantially. So let's wait and see how this market develops. It looks like it is primed for a first time frame change of trend to the downside, but we would like to see confirmation of that, a lower high and lower low. If the market does come off, then we have support down at 96, then down to the Tenkan Sen at 95.28, then to 94.64, and all the way down to the 90 level, and we have the Kijun Sen in between there at 91.22 as well. The cloud will offer support. It's a long way down below these regions, so not in play at the moment, but that's quite important as well. Now, having said that, however, about the short-term dynamics with the gain of momentum by the sellers, we do have a larger shadow on the bottom, and that represents the sellers losing momentum as they tested down below the previous low. So that could be significant for this market. Perhaps there's not as much momentum with the sellers as the red-bodied candle makes out. They did only manage to close the market just down below the midpoint level, so they've taken control of this market, but it's very, very weak control, so that could be significant as well. So that means the confirmation of a new first time downward trend is very, very important. In Ichimoku charts terms, we are trading up above the clouds, and that is a reflection of this very strong upside momentum that this market has in the fast term time frame. If this market comes off, what usually happens when we have very strong the short-term upside momentum, what usually happens is that we find initial support at the Tenkan Sen, the green line, and the market tends to bounce off there. So that's a very important support level for this market if it does come off. Just looking across at the Chica span, that is above the corresponding price action, so that's confirming all of this bullishness that we're seeing in this market at the moment. Now this market will need to build some good solid momentum to take out this 100 level. Could be quite significant. If we do see a very bullish close up above there, then we could easily see the market trading up to roughly about 107, where this next level of resistance is, and there isn't a lot of resistance between this 100 and 107 level, so we could trade up there fairly quickly. But it's more likely that we will see this market come off, relax for a while, perhaps congest, perhaps retrace back down to 96 or even to the Tenkan Sen, and then perhaps change in the first time frame to an uptrend again and have another test at the 100 level. But as always, that's all just purely speculation. We do need confirmation of this, and confirmation would be the market coming off and bouncing off these levels, with the short-term dynamics then supporting a move to the upside. So a bullish market in all time frames, not as bullish in terms of the short-term dynamics. Let's look for a potential lower high and lower low for the next day's trading, or a potential test up above the 100 level.